students, today we are going to see chapter number 2, Depreciation Account of Standard 11 Commerce Subject Account, and this is the second part of account. And today we will see the sum where we are going to see the two machine, and from that one is going to sold, and that one machine we will sold in a partial basis. So let's see that type of sum illustration number 30. Let's see illustration number 3, and where we are going to prepare the working note first. So here JS Limited has purchased some machine. So here some machine, that means the machine are in quantity. Some machine on 1 for 12 for 54,000 and installation expense is 6,000. So cost price of the machine is 60,000. Company has purchased other machine on 11040 for 47,000 and installation was 1,000. So here the next machine is purchased after 2.5 years. Company provide depreciation every year at 10% under straight line method. So here depreciation we are going to provide under straight line method. And 40% of first purchase machine was sold at 30% profit on book value on 31st 3/15. So here from first machine we are going to calculate 40% of that, then we are going to calculate 30% profit on that. Now they are asking to prepare machine account up to 31st 3/15 and showing accounting effect in final account for every year in the books of company. So now very first let's prepare the working note. So working note. Here purchase of machine on particulars, first machine, second machine, and total depreciation. So here first machine purchased on 1/4/12 purchased, and here cost price is equal to 54,000 plus 6,000. So total will be 60,000. So that will be 60,000. Here again at the end of the first year, that is depreciation on 30 plus 3, 13. First year ending on 31st 3/13, and as we know 10% under straight line method will be 6,000. So after the end of the first year, the book value of the machine will be 54,000. Second machine is not here, so total depreciation will be 6,000. And here we will write book value as on 31st 3/13. So that will be this. Now let's provide depreciation for the second year, and that will be depreciation and on 31st 3/14, and that will be again 6,000 as it is straight line method. So after the ending of second year, the book value of the machine will be 48,000. Second machine yet not purchase, so total depreciation at the end of the second year will be 6,000. Now as we know that the second machine is purchased before the ending of the third year, and that will be on 1/10/14. Second machine purchase and that is cost price of the second machine will be 47 plus 1,000. So that will be 48,000. So here the cost price of this machine will be 48,000. Now at the end of the third year, again we are going to provide a depreciation, and that depreciation will be on 31st 3/15. And here this machine is used for whole year. So for that depreciation will be 6,000, but this machine is used for 6 months only. So for that we have to calculate the depreciation. So 48,000 at the rate of 10%. So that will month only. So upon into 6 divided by 12. So this will be 2400. So here the total depreciation will be 8400 at the end of the third year, and from 48 if we are going to deduct 6000, so this will be 42,000, and here from 48,000 if we are going to deduct 2400, this will be 45,600. This is the book value. This is the book value. As on 31st 3/15. Here again, this was the book value. As on 31st 3/14. So this was the again book value. Here again, as we know, at the end of the third year from 42,000, we are going to sold the machine of 40,000. So let's calculate 40% of this. So 40%, that will be, let's calculate it, 42,000 into 40 upon 100. So that 40% of 42,000 will be 16,800. So this is the book value that we have sold book value. So this is supposed to be sold in the balance sheet. Now let's add the profit portion of the sale of the machine. So here this we have sold at the 30% profit. So that 30% profit of 16,800 into 30%. So that will be 5,040. So selling price of the machine will be 21,840. So here selling price, and that will be shown in the bank account. And this is the profit. So this will be profit and loss account. And here now let's calculate the 60% of this machine. So 60% of 42,000. So let's calculate it. So here 42,000 into 60 upon 100. So that 60% will be 25,200. So total of this will be our balance in the machine account. So that is the 70,800. So this is the balance of machine account at the end of the third year, and this is the selling price where we are going to deduct from the book of machine account 16,800, and this is our profit. So students, you may note down this working note. Then we are going to prepare machine account as well as accounting effect for the 3 year for final account. Let's prepare machine account from the working note. So here, as we know that on 1/4/12, the machine was purchased. So when we are purchasing machine, the machine account is going to be debit on 1/4/12 to bank account to cash account. So here, 54,000 in the bank account and 6,000 in the cash account. And here, at the end of the first year, we are going to provide the depreciation 31st 3/13 by depreciation account. So here it will be 6,000. So here we are going to close the machine account. For the closing machine account, 60,000. Here the same 60,000 we are going to write on the credit side. From 60,000, if we are going to deduct 6,000, balance of the machine account will be 54,000. On 31st, 30 by balance carried down. So this 54,000 we are going to take on 1/4/13 by to balance brought down 54,000. Here again we have to give the effect in the profit and loss account. So this 6,000 we are going to take on in the profit and loss account. 2. Machine depreciation account. So here it will be 6,000, and in the balance sheet we'll write in the fixed asset, very first asset is the machine, and the balance of the machine account is 60,000. From 60,000, if we are going to deduct the depreciation, the balance will be 6,000. So here 54,000. So this is the balance that will be taken to the next year, 54,000. Now at the end of the second year we are going to provide depreciation that will be on 31st 3/14 by depreciation account, and that will be again as we have calculated in the working note, and that is 6,000. So now this is the time to close the depreciation account for the second year, and that will be 54,000. We are going to carry forward to the credit side, and here from 54, if we are going to deduct 6,000, the balance will be 48,000. Here on 31st 3/14 by balance carried down, and the same balance we are going to brought down in the 1/4/14 to balance brought down, and the amount is a 48,000. Now let's give the effect in accounting final account. So for that, here 2 machine depreciation account, and the amount will be 6,000. And for the balance sheet, here as we know the balance or opening balance was 54,000, so here we will write machine account 54,000, and from that we are going to deduct the depreciation, that will be 6,000. So here at the end of the second year the balance of the machine account will be 48,000. Now here is the time to purchase the new machine, and that the purchase date of that is 1/10/14, and here to bank account, and the same day 1/10/14 to cash account, and here 47 and 1,000. So this is the purchase of the new machine on 1/10/14. Now let's provide for the depreciation on 31st 3/15. So that depreciation is for the both machine, and that we have calculated in the working note. That is 6,000 plus 2,400. So total depreciation is 8,400. Now we are selling the 40% of the machine, and that selling price we have already calculated, that is on 31st 3/15 by bank account, and that was the 21,840, and here we are going to debit the profit, and that profit will be on 31st 3/15 to profit and loss account, and that profit portion was 5040 that we already calculated in the working note. Now let's find out the balance of the machine account. So for that, if we are going to add 48,000, 47,000, 1,000 and 5,040, total will be 1,01,040. This 1,01,040 we are going to take to the credit side, 1,01,040. From this, if we are going to deduct 8,400 and 21,840, so balancing amount will be 70,800. So on 31st 3/15 by balance carried down. So this is the balance at the end of the third year. Now let's give the effect in final account. So for that, depreciation for the third year will be to machine depreciation. Account, and as we have calculated it, 8,400. And now let's give effect in the balance sheet. So here the balance of the machine account was 48,000. Machine account 48,000, and here we have again purchased the machine of 48,000. So here purchase 48,000. Now this is 96,000. From that, let's deduct the sale, and sale here we have to deduct at the book value, and book value of that machine was 16,800. Sale 40%, and that will be 16,800, and then the balance will be 79,200, and from that we are going to deduct the depreciation, and total depreciation for the year is 8,400. So here the balance of the machine account will be 70,800. So students, this is how we have to pass the effect in the final account as well as we have to prepare the machine account. So you may note down this in your notebook. Thank you for watching this video.